All right, fabulous. So just to start off, guys, thank you so much for taking your time to come and be part of this. And I'm really hoping that it's going to be as useful to you as possible. And like I've mentioned already, please feel free to engage, ask as many questions as you can, and make the most of the time that we have here together. So I'm just going to go through a presentation first, and we can do a question and answer section where I need you guys to just ask as many questions as you can so you can get as much help as you possibly can. Now, I'm not the only one in this group here who invests in property. So if there's anything I don't necessarily know or understand fully, I've got a few people here who are happy to help as well. So don't hold back on the questions you want to ask. Okay, so for those that are already investing in property, for those that already know some of the stuff I'm going to talk about, please accept my apologies. I'm going to go through some stuff that you already know. This is for the purpose of those people who've never, ever heard of any of the stuff that we're going to go through. So just bear with me if you know about this stuff, and just let it run. And if there's any clarity that you need at any point, feel free just to let me know, guys. Okay. So can I just have confirmation that you guys can see this? Can you guys actually see this presentation?
Yes, we can.
Brilliant, brilliant, brilliant.
Yes.
Okay.
Yes, we can.
Fabulous. Thanks for the response, guys. Thanks for the response. And for those that are happy to unmute themselves and talk, please feel free to do that and ask questions. But as soon as you finish saying what you're saying, especially if you've got background noise, please just mute yourself again, and we will just continue talking. Okay, so I've just kind of called this presentation investing in the UK. So it's property investing in the UK. We're going to talk about quite a lot of strategies and how you can get started, how you can scale. And I'll just go through some information that can appear basic to those people in the property industry, but it's quite useful for people that are getting started, right? So the first thing I'm going to go through, in case there's anyone in this group here or anyone watching this video who doesn't know who Muzzie is, I'll just quickly go through who I am. So my full name is Muzzie Nduna. And for that reason, guys, I shorten it to Muzzie. I know there's a lot of people in the group now who are happy to pronounce the name Muzzie Nduna. And there are some people that are not necessarily happy with that. So we're just shortening it to make it easier for everyone. To those that don't know, I come from Zimbabwe, came to the UK a few years ago, back in 2004, and started off in engineering, essentially. Started in engineering as an apprentice and worked my way up the corporate ladder until I got to a point where I was a production manager for a very highly well-known car manufacturer in the West Midlands. Okay, at some point I decided that this is not the path I wanted to follow. This is not something I wanted to do. So I decided to jump into the world of property. And I didn't really know much about it. And like some of you guys, I was absolutely clueless. I just knew I wanted to do something property related. And we sort of like came across a property training company who introduced us to some of the stuff that I'm going to talk about today. Okay, so I'm currently a property acquisition director for one of our companies. There's a few companies that we run at the moment in the property industry. I'm also a property mentor, so I teach people how to do what we do. I am a husband to my boss lady that you can see over there. I always say that I wear the trousers in the house and she tells me which ones. I'm also a father of two. So that's my family there. And that's a brief introduction of who Muzzie is. Okay, so what I want us to start off with is talk about property strategies. So what are these strategies? And they keep moving. So if I start with buy to let, now the easiest one to start off with is the one that most people actually understand. You might not know it is buy to let, but it is called buy to let. This is the concept of buying a property with the intention of renting it out. So you're not buying it so you can live in it, you're buying it so you can rent it out or get a family in there and generate cash flow from the house. That's the basic sort of strategy that people know when people say, I invest in property. So you kind of buy houses and rent them out. It's called a buy to let strategy. Okay. The other one is rent to rent. This is a commonly known strategy in the property world. It's a cash flow strategy. This is a strategy where you don't necessarily have to buy the property, but you can still generate cash flow from other people's properties. Now, we're going to go a little bit deeper into this particular strategy a bit later on. Houses in multiple occupancy are commonly known as HMOs. This is another strategy that a lot of people use, whether you buy the property or you rent it out, and you actually rent the property by room. So rather than put a family in a 5-bedroom house, you put 5 individuals in each room and rent them out and rent each of the rooms out. Right. I hope that makes sense. If at any point any of the stuff doesn't quite make sense, guys, feel free just to highlight that and I can clarify. The next one is serviced accommodation. So this is commonly known as Airbnb. This is where you actually rent out the property on a nightly rate and actually treat the property as a hotel. Okay. Another one, lease option agreements, or also known as purchase lease options. This is one of the most creative and smartest ways to purchase properties, where you agree a price in the future, take control of the property now, and pay for the property in installments. So for example, you purchase a property that's worth 100,000 and let the seller, the vendor, know that you're going to buy it fully in 10 years, but in the meantime, you're going to pay X amount every month towards that, and then do the completion at the end of the 10 years. Now, I know some of you guys might be thinking, why on earth would anyone ever sell their house in that form? This is really good for properties that are in negative equity. Now, for those that might not know what that means, so equity itself is the difference between the value of the house and the debt of the house. So as you know, when you buy a house, you put a deposit and the bank or the lender pays the rest of it. So if we use simple numbers like 100,000, if the house is worth 100, you pay 10%, 10,000, and the bank gives you 90,000. So the debt is 90, the value is 100, so your equity is 10. But for these properties that are in negative equity, that's when the value of the house is lower than the debt of the property. So back in like 2008, 2009, there were banks that were giving more than 100% of the value of the house. You would say, I want to buy this house, it's worth 100,000, and the bank would be willing to give you 110, 120,000 for the house and give you extra for either renovations or for going on holiday to celebrate your purchase. So you would have a debt of 120,000, but the value of the house is 100. Therefore, you earn 20,000 pounds negative equity. So even if you were to sell the house at its value, you would still owe the bank 20,000 before you can actually walk away from that situation. So a lease option agreement is a good way to buy houses that are negative equity because you are actually purchasing the debt. So you can kind of pay off the debt slowly until the point later on where it's now in positive equity and you can actually purchase it. This works for the seller because they don't have to pay anything at the point that you purchase. And it also works for you because as you're paying on a monthly basis, you're not the one who's actually paying. Guess what? It's actually the tenant who's paying. So the house kind of in a way buys itself. Now, I hope that makes sense. And if it doesn't, drop some of this stuff in your notes for a question that you can ask at the end as well. Okay, another strategy is deal packaging. So deal packaging is when you can get involved in these strategies, find them, and you don't necessarily take them on, you sell them onto someone else. So someone doesn't have time and doesn't have the knowledge or the resources to be finding these amazing deals. You go in, do the negotiations, find the potential deals, and get the deal packaged in terms of you've got the location, you've got the type of property, you've got the property that produces a cash flow that someone is asked for, and present it to someone who has money. You pass that deal onto that person and they pay you for the work that you've done. So you get involved in property without fully getting involved, but get paid for your time. That's another great strategy to get involved in because it gives you knowledge and experience. Lastly, but not least, because there's loads of these strategies, is commercial conversions. Now, this is one of the best ways for making a huge sum of money at the same time or with one deal. These may take a long period of time, but a simple way of explaining what a commercial conversion is when you actually find commercial buildings, i.e. shops, office buildings that are derelict or office buildings that are not being used anymore, because as you guys know as well, a lot of things are going online. So some of these shops where we used to walk in physically are no longer there. Some of these offices are not required because people work from home. You can convert those offices into residential properties. And because we have this deficit of housing in the UK, there's too many people, not enough houses. The government are actually helping people that are doing commercial conversion by offering grants to be able to do these offices and turn them into residential properties to help people who are looking for somewhere to live. Okay, so these are the only strategies that I'm just briefly talking about. But like I said, we're going to go a little bit deeper into the rent-to-rent one. Now, if this makes sense, guys, please just confirm in the chat that this makes sense so far, just to make sure I'm not actually talking to myself. Or just unmute yourself and say yes or no.
Yes.
Yes.
Yes, yes, makes a lot of sense. Thank you.
Fabulous, fabulous, fabulous. Okay. So if I just quickly go through the concept of buy-to-let, I can see the chats, guys. Thank you very much. Thank you very much. Right. So if we just go through the concept of the buy-to-let, which is the common way of investing in property that most people have a good understanding of, even if they don't actually invest in property. So the buy-to-let, we're going to go through the things that are required for you to be able to do this. Okay. So what is required? You need funds for the deposit. So I've already spoken about the concept of having to put a deposit in, and then the bank or the lender pays the rest of it for you to be able to purchase this property, and then you pay a mortgage later on. Now, if it's a buy-to-let, when you go and buy a residential property, one that you're going to live in, you're most likely going to need to raise about 10%. Some banks are offering 5% deposit at the moment, where they then pay 95% of the rest of the property. But when it's a buy-to-let, you're commonly going to have to raise 25%. So if you're buying a house that's worth 100,000 and your intention is to rent it out, you're most likely going to have to raise £25,000. Okay. You're going to need funds for stamp duty. Stamp duty, which is about 3% of the purchase price. You're also going to need to raise the funds for a solicitor or a broker, because all of this is part of the process. You need a solicitor to be able to complete on a purchase. You're going to need a lot of knowledge of exactly how to do what you're looking to do, especially if you're looking to cash flow from this buy-to-let. Ultimately, that's the whole basis of it. If you're not going to cash flow from these deals, then what's the point? You're going to need a lot of time, because this is not something you can just walk into a shop, buy it, and walk out carrying. This takes a lot of time. This process is actually time consuming. And at the moment, I think the stats are like 1 in every 3 property purchases falls through, which means even after offering and an offer being accepted, there's a very high chance that you're not going to be able to purchase that property. If something goes wrong on the other side, if something goes wrong in your process, because so many different entities are involved, this can take a long period of time. It can put people off, offers can be pulled off the table, and you could start all over again. Okay, you require people, a network, and because some of the properties that you're going to purchase are not necessarily ready to be rented straight away, you might need to do some renovations, you might need to do some certain analysis. So you need a network of people with different skill sets. And lastly, the skills themselves. Soft skills, i.e. the communication, so you can negotiate the best deals. Hard skills, if you are one of those people who are happy to use your hands and actually do a lot of the stuff yourself. So all of this is stuff that's required on a buy-to-let. Now, the reason I'm highlighting this stuff is to let you know that because all of this is required, it can be a time-consuming process, and it can be a bit daunting. However, you don't necessarily need to be the only person who possesses everything, okay? the money that's required for a deposit, the money required for stamp duty, the money required for the solicitor, and sometimes the money required for the refurb doesn't necessarily have to be yours. The knowledge doesn't have to be yours. The time doesn't have to be yours. The people don't have to be connected by yourself, and the skills that are required don't necessarily have to be yours. If you look at all of the requirements and see where you can fit in and say, okay, I don't have the money for it. However, I've got the knowledge and the time of being able to do this stuff. So you offer the knowledge and time in this whole picture, and find someone else who can offer the funds, and find someone else who can connect people, and find someone else who has the skills. You connect the whole thing. You can actually be part of a property investment without having to put everything that is required. And I hope that makes sense. And on that note, I'm just going to go through a case study that kind of goes through this concept here. Okay, so on the right-hand side here, I'm going to tell you a story about Tom. Okay, this is a guy called Tom, and this, for those people who are in the Coventry area, you might recognize this area here. This is in Hillfields. Now, this is about a year and a half, 2 years ago. I sent out some leaflets looking for properties. Okay, I was looking for properties that we can actually find good deals, and a leaflet landed in his house. He hadn't actually put this property on the market, so no agent was aware of this property being for sale. He found the leaflet in January, kept it in his drawer, and didn't contact me till mid-May. And he rang me about this property in this area, of which I was a bit confused because I couldn't even remember that I put leaflets in that area, and said that, you say you want to purchase my property, I'm looking to sell. And he then informed me that this property is not actually on the market, of which I said, is there any chance I can view it? Now, I went to view this property and he completely forgot about this viewing. And because this area is not necessarily a great area, it's got kids running around, it's a very noisy area, and they muck about, they're always kind of banging on his door, and he's used to that happening. So he kept a baseball bat next to the door. So when I knocked on the door, he assumed that it was one of the people that usually banging on his door for no reason. And he opened the door holding a baseball bat, of which I was thinking, okay, have I come to the right property here? Now, this is just part of the story. And at the end, when we actually purchased his property, I asked if we can take a picture whilst he's holding this baseball bat. Now, that's the story behind the baseball bat for anyone who's wondering why he's holding that. So Tom's story was, he's just sick of staying in this property, and he wasn't happy going up and down the stairs anymore. All he wanted was a bit of cash to be able to purchase a bungalow and move to a quiet area. That's literally all he wanted. And we managed to help him out, okay? And to be honest with you, at the time that I actually did all of this, I actually didn't have any of the money whatsoever. I didn't have any money whatsoever. So in all of this process, what I'm trying to point out and prove to people is you don't have to have the money to make these things work. So I'm just going to go through the numbers. So the property itself is actually 2-bedroom terrace property in the city center, okay? And the market value, it was valued at about 120 the way it was before I did anything to it, okay? We agreed a purchase price of 94,495. Bear in mind, I did not have any money still. I looked at the refurb cost. I got a few quotes and it came up to about £24,000 for the quotes that we required for the work that we needed. We wanted to extend the back and get a bathroom in. The investors that I worked with that put in all the money, so we actually purchased this cash. I found an investor who was willing to actually put all the money in cash, and he charged me 1% a month interest. Now, this project actually ran for about 6 months, so the interest ended up as 5,669 and 70p. So all in all, the money that was put in was 124,164. Now then, the end value of the property after we did everything, it came up to 140,000. That's after we did everything. Bear in mind, it was worth 120 before, now it's worth 140. We bought it for 94 grand, but now it's worth 140. And like I've mentioned before, Once it's actually at this new value and I want to refinance it, i.e. go to a lender and say, I want to put this on a mortgage, they would want me to raise £25,000 or 25% of the value. Now, if the property is already yours, you don't have to raise the money. They just leave the 25% in the property. Therefore, it's worth 140, 75% of 140 is 105. So they gave us 105,000. What I did with the 105,000 is I paid off the investor, the 94,000 plus the 5,600, which was the interest. And we actually had a little bit of money left. And out of all of the money that we put in for the refurb, there was £19,500 left in the deal. Now, the question that some of you might be asking is, where did I get the 24,000 or the 19,500? At the time, for some of you, you might already know, but there was offers for bounce back loans. And this is one of the greatest purposes of it, to be able to improve your portfolio, to increase your business, to actually do what you can to make your business survive through the COVID period. And we used that bounce back loan to do that. So now, with the money that's left in that we have to pay back to the bounce back loan, this property is now running as a serviced accommodation and it's producing a cash flow of about £800 a month. So when I say cash flow, I'm talking pure profit after everything is paid. Now, this property is the one that's actually paying its own debt off. I don't actually have to pay from my pockets. The tenants in there, i.e. the business itself, is paying back that debt. Now, the concept of why I'm sharing this information is, remember, I did not have any of the money, but we still managed to get a deal like this done. This is just to point out that you don't have to be the one who has the money. There's money required to do these deals, but the money doesn't necessarily have to be yours. Okay, so before I move on, I just need confirmation again, guys. Does that make sense to you?
Yes, it does.
Yes.
Awesome. Awesome. Okay. Right. Just checking in the chats just to make sure I'm not missing anything.
There's a question in there.
Yeah, I'm just having a look now. Right. Do buy-to-let lenders allow the property owner to sell the house and settle the original debt from the sale, or they value the property at going price or on the market? Okay. In other words, how does the property owner benefit from the capital growth? Right. Are you speaking in particular for this deal that I'm talking about, or is this a general question?
General question.
Okay, so the capital growth of the property itself, it depends on when you actually bought the property. So if you bought the property, for example, in the year 2000 and you decide to sell it today, you are now selling it at its current market rate. But at the point that you bought it up until now, you've been paying the mortgage. Therefore, your debt itself has been going down and the value of the property has been going up. So at the point that you sell the property at its new market value, and on top of that, there's an element of inflation as well, which is a different side, which is a good thing for whoever's selling the property. Your benefit of the capital growth is as you are living in the property or renting the property, whatever you're doing, you were bringing down the debt whilst the value of the property was increasing. So that's where your major benefit is. And the other part, does that make sense? Is this layman?
Yes, it is. Yeah, the question really is because it's not your home. It's the lender's home anyway. So when you sell it, it's theirs. All they wanted to do is to give you a loan, and so you could pay back interest. So my assumption was that they would say, well, this is our property. This is our capital appreciation. We'll sell it at the market price.
Got ya. So you're talking about the lender as in the person or the entity that gives the money over. Right.
Yes.
So it's not necessarily their home. The home belongs to whoever's name is in it. Okay. So even though so if I take the example that I've given now, the 94,495 came from the lender. Yeah, we're calling them the lender, but they have loaned me that money. However, the purchase is in my name or my company's name. So the home belongs to me, but I have the responsibility of paying off what's been given to me that's allowed me to buy that home. Okay, so the capital gain itself, or the capital allowance for the property itself, is all mine. They are just getting their interest based on the money and the agreements that we've had. So as I've mentioned, the investors asked for 1% a month interest. That's what I'm responsible for paying. So the longer I keep the money, that's where the benefit is. They've given me 94,000, but I have to pay them 5,600 on top of what they gave me. That's their benefit. But the capital allowance itself, or the gain of the property itself, doesn't necessarily affect them in any way. They don't get anything out of it because it was a loan to me. Does that make sense?
Does. Thank you.
Yeah, perfect. Perfect. Great question, by the way. Okay. So what we're going to go into now is the rent to rent element, like I've mentioned. So we've been talking about purchasing the property. And
sorry, Muzzie. Hi, it's right. On
yes.
the previous section, I've got a question. How do you find these investors? Is there a platform, or is there? How do you find them? Is what do they look at when they want to lend you the money? Do they come and do evaluation on the property?
That's a really good question. Thank you for asking that question. Now, in the world of property, we use the word investor, or we use lender or entity. These are just fancy ways of saying people. So where do you find people that have money? It's sometimes really difficult for you to actually figure out someone who has money just by looking at them. Okay, so what we usually talk about is when you're looking for any funds, when you're looking for anything in particular, you work more on yourself and attract it to you. Okay, the more you talk about what it is that you do, the more value you add to people, you will be surprised how much money actually starts coming to you. Now, there's certain platforms that you will find, i.e. crowdfunding, bridge loan finance. You speak to mortgage brokers that they can actually tell you where to find finance, people who provide that finance. It's easy to go to those people and actually present the deal, and they will fund it for you as long as there's less risk from their side. However, those kind of entities will probably be more expensive. What you want to find is someone who trusts you, someone who connects with you in some way. It doesn't have to be a relative or a close friend. It just needs to be someone who has socially proven that what you're doing makes sense to them. You connect with them, and they just happen to have a lot of money. Now, who I call the investor for this particular deal was actually a person that I just bumped into in a networking event. I didn't go and ask them for money. I just spoke about the type of deals that I found, and they came to me and said that if that is something that would work in the numbers that you've spoken about, I'd be willing to put the money. Does that kind of answer your question?
Yes, it does. Thank you.
Brilliant, brilliant. Okay. I've got a couple of questions here. Let me just go through them. So far, so good. Please, how did you pay the 1% and when? Okay, great question, Eki, thank you. The 1% itself, I didn't have to pay it on a monthly basis. They just said it's 1% a month. So it was accumulative. Because it took me 6 months to finish the project, they just put it at the end to say 1% a month of what you owed us would come up to 5,667. So when you pay us back, pay us what we gave you plus the 5,667. And how I paid it was actually from the lender. So the new value of the property is 140,000. They gave me 105, which is 75% of the value, the new value. So when that came, I paid the 94 plus the 5,600 from that money. That's how I paid it back. Hope that makes sense. Right. Tabos just added as well a bit of information for those that are talking about where to find people with money. Everywhere you go, including on this call right now, there's people who actually have funds, and people who have money don't tend to go around talking about the fact that they have money. It's from my experience, those who talk about how much money they have don't actually have much money. So just be authentic and present yourself in the best manner, and you will attract people that have money. So money will find you. they are normal people. Yes, they are indeed. Right, is that 5,000 interest payable every month, using the example, by the way? So yeah, I'm hoping I've answered the question based on what Eki was asking. So you don't have to, it's dependent on who's lent you the money. The terms are agreeable to whoever's lent you the money. You can discuss how you want to do it. I always prefer not to have to pay it on a monthly basis. Whatever I lend, just tell me what interest you want. We agree the interest, and I'll pay it at the end as an accumulative figure, rather than have to pay on a monthly basis. Okay, I hope that clarifies that, Mems. Cool. Thanks for the questions, guys. These are really useful questions, by the way. Right, I've got someone who's raised their hand. Tendai, do you want to unmute yourself? Okay, it's probably clicked by mistake. Mems just confirmed, thank you, understood. Fantastic. Right, I'm going to quickly move into the rent-to-rent space. So rent-to-rent, for anyone who might have never heard of this concept, is similar to buy-to-let, but instead of buying to let it, you actually rent it to rent it. So you take on someone else's unit, say take on someone else's house, rent it off them, and then rent it on a different strategy that will give you more money than what you have to pay to the landlord. Okay, if you buy the house, you rent it and make more money than what you have to pay the lender. But if you rent to rent it, you take it off the landlord, rent it off in a different strategy that gives you more money than what you have to pay the landlord. Okay, hope that makes sense. Now there's this statement here, it's very commonly known in the property world. The secret to success is to own nothing but control everything. This was said by a guy called Nelson Rockefeller. Some people might know the Rockefeller family is one of the wealthiest families ever in history. And this was his secret. And he mentioned that you own nothing but control everything. Now, rent to rent itself is that concept of controlling other people's assets and making cash flow out of it. So a good example is Uber is one of the hugest transport sort of company, but they don't own any cars. Airbnb is one of the biggest ever accommodation platforms, but they don't own any houses. They control other people's assets and get cash flow from them. And that's what rent to rent itself is about. So I'm just going to quickly go through an illustration because we've spoken about purchasing. And based on that concept, if we imagine in this area, the rent in this area for this particular house is £1,000, the income that you can make from a different strategy, a creative strategy, whether it's service accommodation, HMOs, social housing, supported living, whatever it is, let's say the income is 2,500 and the bills are 500. I'm keeping to kind of simple numbers here so it kind of makes sense. Let's imagine in this area, this beautiful house here is worth 100,000. So as mentioned, if you're buying it to let it, you have to raise 25%. Therefore, your deposit is 25,000. Stamp duty, land and tax is going to be 3% of the purchase price, i.e. 3,000. The legals, i.e. solicitor, mortgage broker, is probably going to be about £1,000. So to purchase this property, which is worth 100,000, you have to raise £29,000 to be able to purchase it. And let's say the mortgage is about £500. Now, the mortgage is dependent on your circumstances and the lender's requirements, but to keep these numbers simple, let's go for £500. So if you were to buy this house and run it yourself, make an income of 2,500 and have to pay out £500 mortgage and £500 bills, you're going to be making £1,500 a month. Okay, I hope that makes sense. I'll quickly skip over to rent to rent. So with rent to rent, you're not paying a mortgage, you're paying the rent. Okay, so you pay £1,000 rent, you get that same income because you're doing the same thing we're talking about, and you have to pay £500 bills. So your cash flow is going to be £1,000, okay, because the rent is higher than the mortgage. Now, in terms of getting the rent to rent, what you're probably going to need to pay for is the first month's rent, the deposit, and the setup cost. Depending on the state of it, it could be anything around £4,000. Right? So looking at this picture, it may seem like if you buy it, you're making more money on a monthly basis, which you are. And if you rent it, you're making slightly less. However, the bigger picture that you look at is to be able to purchase that property, you have to raise £29,000 to make 1,500 a month. However, if you use the same amount of money to go for rent to rent, you could get 7 of these properties, making £1,000 each. That's where the major difference is. This is the concept of controlling other people's properties to make cash flow. Now, if you really wanted to just buy these properties, the smart way to do it is to control them first, let them raise your funds, and then actually purchase using the funds you've raised from other people's properties. Okay? Does that make sense? I need yeses and nos here.
Yes, it does.
Fabulous, fabulous, fabulous. Awesome, awesome. Right. Let's quickly whiz past this so we can actually get to the Q&As. Right, okay, that's making sense. So what can you do with the rent-to-rent deal? Now, I've already mentioned there's so many different strategies you can do, but I'm going to talk about the 2 most commonly spoken about. HMO, which I mentioned earlier on, which is houses in multiple occupancy. This is when you rent out the rooms by room in whatever area you go for. Now, this is regulated, so dependent on where you are, you might need to consider speaking to the council and looking at what the requirements are for HMOs in that area. The other commonly spoken about is service accommodation. Now, service accommodation at this point outside of London, outside of the M25, is not regulated. So as long as the property is good enough for a standard residential property, you don't necessarily require a license, you don't necessarily require anything else. So at the moment, a lot of people are utilizing this opportunity to generate cash flow. Now, service accommodation is when you're actually running the property and using it as a hotel or charging a nightly rate. You dress it up really nicely. So the picture that you're looking at is actually one of our own in the Coventry area. And it's a 1-bedroom house, and it also works very, very well, even in places like Coventry, believe it or not. Okay, so where can you find these deals? The same platforms that you would find deals if you were to look for somewhere to stay. So if you were to move out of your mom and dad's house and you decided to go live somewhere, or if you decided to move out of the house you live in now and relocate to a different area, the same platforms that you would go for to go find somewhere to live is the same platforms that you would find these deals. So online platforms, Rightmove, Zoopla, Spareroom, Gumtree. You can speak to property agents, letting agents, deal sources, or deal packagers. I mentioned earlier on, one of the strategy is deal packaging. So you can speak to those people that do that and ask for them to find these types of deals for you if you're willing to just pay them for their work and time. Direct to vendor, i.e. send leaflets. Like I mentioned when I did it with Tom, you can still send leaflets finding properties to rent. Send letters directly to people that are running HMOs. There's HMO registers in different counties. You can speak to the council. They can give you a list of all the HMOs in your area, and you can send letters directly to those properties and see if you can help those people and offer those properties to them. Social media presence. So Facebook, Instagram, whatever social media platform you're used to, the more you talk about what you do, the more you share the value of what you can do for other people, the more likely you're going to get people wanting to come and work with you. And these opportunities will start coming to you from that point. Okay, networking. Networking, what we are doing right now is actually networking. As I'm talking about these strategies and the information I'm sharing, you are now connected to all the people that are part of this. You can actually connect with them because we are all in the same kind of mindset. We want to use property to better our lives. So the more you connect with people that are the like-minded, the more chances you're going to find opportunities. So this is where these deals also come from. Hope that makes sense. Now, one of the reasons why people don't invest in property or in any of the strategies we've spoken about is because we constantly hold on to what could go wrong. Okay, now because we do that anyway, I wanted to add this to this presentation so I don't give anyone the perception that nothing goes wrong in property. Things do go wrong. Okay, now let's just address some of them. Not enough guests booking the property, very likely. It's gonna happen, very likely. Too much upfront cost, I have no money. We've already spoken about that concept. And this can actually happen even if it's a rent to rent. Now we're talking about either 29,000 to purchase one property or 4,000 to control a property and generate cash flow. There's people, even in this platform, like myself at the start, who are like, I still don't have that 4,000. It's less than 29,000, but I don't have the 4,000 either. So what do? Landlords pulling out of the agreement, very likely, it can happen. Okay, no profits even at high occupancy. Now you get people that take on deals and the properties are full, 89%, 100% full every month, but they're still not making any money. That's very possible. Bad guest booking the property. This is the big one. As soon as you talk to someone about service accommodation or Airbnb, they will tell you about every single story they've ever heard of about a property being trashed. And it's just human nature that we hold on to all the bad things that could happen. And we use that to justify the fear of not starting something that you know can actually work. So we'll address that as well, because it's actually possible as well. Okay, now what I want to do is go through each of them and let you know what you can do about them. How you can sort of overcome these challenges. So not enough guest booking the property. Do your due diligence up front. Do your research before you even go to a viewing, before you speak to an agent. Do your research. The strategy that I want to do in this area, does it work? HMOs, you're going to get either professionals or students. If you're looking to get students in an area that doesn't have universities or any colleges that might take on students, then you're most likely going to fail because it's not an area for that. If you're looking to do service accommodation in an area that has nothing going on, there's nothing that would attract a tourist, there's nothing that would attract any contractors, you're most likely going to fail. So get your due diligence done before you even make an offer on any property. Now, once you've got the property and you've done your due diligence, you know that it works in the area, you know that it works for the contractor markets that you're trying to target, you still have to do the marketing. It's no point having a brilliant property in a brilliant location if no one knows about it. This is where marketing comes in. You have to do some serious marketing. And for those that have service accommodation units, before COVID, putting a property on Airbnb and booking.com and leaving them there, it most likely would have worked. You won't need to do anything anymore. But a lot of you might know now that is no longer enough. So you have to do a bit more work on the marketing. Okay, too much upfront cost. I have no money. What can you do about that? So you can negotiate rent or deposit free periods and also use credit. So when I'm speaking about rent free periods, you can have a month free of rent and you don't necessarily ask for rent free periods to the landlord because that doesn't sound like you're giving them anything. Some of the properties that you'll get will not be good enough for you to start renting them out to service accommodation. So you show them pictures of what you want the property to look like. You ask them if you can do that work to that property for the next 3 or 4 weeks without any rent to increase the value of their property. So if you do something like that, they will see the value of you putting more value into their property for a month, and then you start the term. Ultimately, you're asking for the same thing, but you've presented it in a way that puts the value on their side, okay? Deposit-free periods for people that are running HMOs. Once you pay the deposit to the landlord, you're then taking a deposit from your tenants. What's the point? Why don't you actually arrange for a deposit protection scheme where the landlord has access to it? The tenants pay the deposits, the landlord has access to that same deposit because that money is doing exactly the same thing. So you then actually get started without paying a deposit yourself. And using credit, when I say setup, you're going to need to purchase property, you're going to need to purchase furniture. And you can work with companies like IKEA where you can purchase everything you want and pay for it on a monthly basis with no interest. So some companies allow you to do that, like IKEA, and therefore you can actually get started without paying anything upfront. And guess what? Once the property, the furniture is in, you're not the one who's paying for it, the tenants are, okay? So landlords pulling out of the agreement, that can happen. What can you do about it? Align your agreements to protect your finance. So make sure the management agreements you're signing protect you. So you can put either break clause, or you can put information in there that says if either one of us pull out before this period or before this amount of money has been clawed back, you are now liable to pay the other party. So you protect yourself. Even if they pull out, they are liable to pay you whatever you've put into it. No profits even at high occupancy. That lines up with the due diligence at the start as well. So you have to do accurate deal calculation so you know what to offer for the rent. So a lot of people don't actually realize that when the property is advertised and they say, this is the rent I'm looking for, that doesn't mean you can't actually make a lower offer. You can still make a lower offer and let them know how you've come up to that number. Don't just say that I'm offering something less just so you can get something out of them. Explain how you got to that number. Explain how your business works. Be authentic, be honest about what's happening. People will be more likely wanting to work with you at that point, rather than just offering something lower for the sake of it, because that can come across as insulting. Okay, and then the last one, which is bad guests booking the property. Now, guys, this does happen. And I know some SA operators in the group now listening in who will confirm this does happen. However, it does not have to be the end of it. It does not have to be a reason that you don't do it, because it is a very small percentage. Now, the one time that it happens, even if it's in 3-4 months, is a painful experience, I agree. But it's a small percentage of it, which does not justify you not getting involved in property and making quite a lot of money that could be life-changing. So what do you do about it? Take necessary measures to reduce the chances. So you can do certain things like putting cameras in, getting their IDs and finding out more information about the people that are coming to the property before they come in, creating good relationship with neighbors because they're your eyes and ears, and you can catch certain things before they actually happen. So we've got the same thing. We've got cameras, we've got good relationships with our neighbors. Just last weekend, this is something that happened in one of our properties. 5 people booked, our neighbors knew about that. And then when person number 6, 7, 8 started walking in, even though we could see it on the camera, we were getting phone calls from our neighbors saying, this has happened, are you aware of it? Okay, and that gave us a chance to go and stop things from happening before they actually happened. Okay, but the point is, this stuff does happen. However, don't let it scare you away from getting involved in property. Right, I hope that makes sense. Does it make sense to you guys?
We are following.
Brilliant. Yeah, I'm seeing yeses.
Yeah, it does.
I can hear yeses as well. Fantastic, fantastic. So I'm not talking to myself. Okay, I've got a question in the chat. Just a quick question. Can someone with bad credit get a mortgage? Now, this is more of a mortgage broker kind of question. Okay, now I know people with bad credit who have managed to get mortgages. The only problem is, dependent on how bad your credit, the lender is going to have a high interest because you're a high risk person. Now, if you have bad credit does not mean it's the end of it. You do not get a mortgage. You can still get mortgages. They might be a bit more expensive, but the strategies like rent to rent that I'm speaking about, lease option that I mentioned earlier on, where you can still get into property with bad credit, and it gives you time to improve your credit before the point you actually have to purchase. So you can still actually get this stuff done. Okay. I hope that clarifies that.
Muzzie, can I add on that one?
Yeah, sure.
Like regarding bad credit. Yeah, you've got bad credit now, but why can't you start cleaning it up? You know, because bad credit can be wiped out in 3 months or 6 months. You know, if you start paying off your debt off and just try build your credit rating up again. You know, because it's not like you're gonna stay with bad credit forever unless you're planning to stay with bad credit forever.
Absolutely. Absolutely. That's a good point. So you can actually still get involved whilst you clean up your credit. And as part of our network, we do have a finance expert who can also help with the quickest ways to get to improve your credit scores. So if you want contact for that, let me know. I will put you in touch. They're happy to give you free consultations for like half an hour, if I remember well, and they can talk to you about your current circumstances and what you need to work on. Okay, thanks for pointing that across. And I've got another question. Talk to us, please, through contract agreements in a rent-to-rent scenario. Okay, great question this is. So I just need to clarify, when we say rent to rent, this is when you're actually taking on a property for rental, as I mentioned. However, if you have the intention of renting it out to someone else, you need to sign the correct paperwork. Okay, so this is why I'm saying this is a brilliant question, Layman. So if you're taking on a property on a rental for you to live in it, you're going to sign a contract called an AST, which is an assured short hold tenancy. That says, I, Muzzie, am living in this property. You, Mr. or Mrs. Landlord, are responsible for what happens in this property. I will pay you rent. I will live in it. That's an AST. Now, if you have the intention of renting it out to someone else, do not sign an AST. That becomes subletting, and that is not correct. Now, what you need to sign is a management agreement or corporate let agreement or company let agreement. They have these fancy words, but ultimately they point out that you are responsible for the rent, but you're not the one living in the property. You're responsible for whoever's in the property, and you will pay the rent, you will pay the bills, and you will cover the responsibility of the house. The landlord or landlady will still be responsible for the building and the building insurance and the boilers. So the structure of it, because they still own the property, and it's a legal requirement for them to have building insurance anyway. So the structure of the property is still their responsibility, including the boilers. So that's how that works. Sign an AST agreement if you're living in it, sign a management agreement or company let agreement if you're renting it on. I hope that clarifies that, Layman. It's a great question again.
It does. Perhaps one more question.
Yeah, go for it.
In your experience, is it better to charge rents inclusive of all the bills, or you rather pay on your own?
Charge rents inclusive. What do you mean? Sorry,
tenants paying for the bills themselves, and you just get your own rent without exclusive of bills.
Oh, yeah, I see what you mean now. I see what you mean. So I'm going to use the scenario of an HMO. Okay. So when I charge the tenants through the HMO strategy, the rent is included. The bills are included in the rent that they pay. So the tenants do not pay separate bills. Okay. So this makes it so much simpler. And besides, it complicates things if 2 or 3 or 4 different people are trying to pay for the bills for the same house, setting it up with any of the companies that will offer gas, electricity, broadband and stuff. So I take on a property from, I'll use actual numbers of one of the HMOs we have. The landlord has asked for £800 a month for a 5-bedroom house. Okay. My tenants are paying £425 a month for each of the rooms. I pay the bills from the money that the tenants give me. I pay the rent from the money that the tenants give me. I keep the difference. Does that make sense?
It does.
Yeah. So yeah, I would recommend you the one who does the bills, so you can actually control what's happening in the house anyway. Okay.
Sorry, the last one. In your estimation, from your experience, how much would that be for gas, for example, electricity in an HMO on average?
We make an assumption that across the country, now you may be slightly off, make an assumption that each room is going to be £100 a month. Okay, now that covers everything: gas, electricity, broadband, TV license, council tax. Assume that it's about £100 a room. So if it's a 3-bedroom house, assume it's £300 a month. 4-bedroom house, assume it's £400. Until you get actual details of what the bills are, just make that assumption to make your deal calculation.
Thank you very much.
Okay.
Yeah.
Real. Great questions. So, in summary, what we've spoken about is what the property strategies are, what you can do or what you can achieve with them, where you can find them, challenges in managing them, and also what you can do now. So we've just spoken about all of this concept, and with the basic information that we've just shared here, you can actually start taking action if it's something that you're looking to do, whether you're starting from scratch or you're looking to actually scale with whatever you've already got. Now, there's a couple of things I'm just going to put in, which was a bonus material. Now, some of you guys have been to property training companies and you'll understand some of the things that I'm talking about here. And I feel it's one of the most underspoken about, if the word underspoken even exists. There's not enough people talking about this. And I think it causes so many problems, because when we talk about property as a whole, it's easy for people to visualize the amazing things that they can do, to visualize the amount of money that they can make within weeks, within months. And then they easily, very quickly get disheartened when reality hits hard. So I just want to go through that, some of that information now. So you are going to lose quite a lot of money, okay? So keep this in mind. You're going to lose a lot of money. You're going to get rejected. So for those people that are not comfortable getting people saying no to you, even after presenting a fantastic deal in your eyes, that's going to happen. You're going to lose a lot of friends. Unfortunately, as soon as you start changing your direction, if you're known as the football guy and all you do is talk about football, and all of a sudden you're starting to talk about property, the football guys kind of start shifting away from you because you've changed direction. Bear that in mind. I wasn't ready for that. Okay, it's going to be very challenging. So be prepared for that concept, because the challenges are coming hard. You will feel lonely at times. Like I said, when you're peeling away from your circle of friends, there's a period where you're moving from your current circle to the new circle where you feel lonely because you're still shifting. Okay, that can be a difficult position to be in. And a lot of fear will set in. Okay, now, fear sets in whenever you're doing something new, whenever you're jumping into something that you feel uncomfortable with. And if it's not something that you've done before, it's natural to start feeling a lot of fear over it. Now, I'm telling you this because I need you to expect it. If it's something that you're actually doing for the first time, the more you expect it, the less surprising it's going to be, the less hard the challenge is going to be. But I'm going to go through what you can look at in terms of each of the points that I've just mentioned. I'm just going to quickly look at the chat. Something has just come through. All right, awesome. Pauline, thank you for joining. You have to shoot off, I understand. A point that's just been added: you lose friends and gain family. I love that. I love that. Thanks for that, Tavo. Okay, so it's all in the language and how you speak to yourself and how you look at things. So I'm looking to change this language at the same time. So instead of looking at I'm going to lose money, it's I'm investing my money. Okay, so I comfortably speak about the fact that I've spent over £35,000 just in education. And some of the people listen to that and think, well, you could have bought a house in that. Yeah, true. I could have bought a house, but the knowledge I've created has allowed me to raise a lot of money. For example, the £94,000 property that I actually managed to get, that knowledge I can continue using over and over and over again. That's based on the investment that I've put in. So you look at it as I've invested that to then gain the knowledge that will allow me to get a lot more than what I've actually invested. Ultimately, sometimes we worry about how much money we spend in education, which is a concept of worrying about the cost of a shovel when you're digging for gold. So you just need to understand that it's an investment of money rather than a loss of money. And even when you're making mistakes, it's still an investment because you need to learn something from those mistakes. If you don't learn anything from those mistakes, then it's a loss. But if you're learning something, then it was an investment of money and time. Okay, right. Right. I've just had someone ask for the last slide. I'm not entirely sure which one it is. Can you just come off mute and let me know which slide you're asking for?
Just after this one, just quickly back in, 2 seconds.
Okay, so this one.
A bit more. Yes, that's fine. I was just missing something. Thank you.
All right, cool. No problem. No problem. Right. So we've just gone through that bit. So you are going to get rejected. Change of language again. I will either learn or I will earn. Either way, I won't lose. Okay. So it's still the concept of the pain of loss it's not a loss if you're learning something from it, even if it's a painful experience at the time. A lot of times it's just the example of the best people that have done the best things have gone through the most amount of pain. So if you've fallen off a bike a few times, you're probably one of the best people to actually ride a bike, because you understand not to fall, you understand the pain of falling. And sometimes you have to go through those pains to be able to be the best at what you do. So you're either learning or you're earning. Either way, you don't lose. So don't worry about rejection, because it's not rejection, it's just part of the journey. You are going to lose friends. I am outgrowing my current circle of friends. So at the particular time that you're moving from your current circle of friends, moving to a new one, yeah, you are actually outgrowing the current circle of friends. And like Tabo said, you might lose friends to gain family. I love that. I love that. So it's going to be very challenging. Every skill worth acquiring comes with a challenge. If it's not worth acquiring, it's not going to be challenging. If it's worth acquiring, if you think about all the things you've managed to achieve that you're most proud of yourself of, they came with serious challenges. And if they didn't come with challenges, they probably wouldn't be worth talking about. Okay, so you will feel lonely at times. I'm transitioning into a circle that aligns with my goals. Like I said, as the more you move towards the new target, the more you move towards the new vision that you now have, you're going to lose a lot of friends. But look at it as you are transitioning into a circle of friends or a circle of a family that aligns with your goals. So therefore, you'll get to where you want to be a lot quicker. Now, a lot of fear will set in. False evidence appearing real. That's fear as an acronym. False evidence appearing real. Feel the fear and do it anyway. So that's a book, Feel the Fear and Do It Anyway, by a lady called Susan Jeffers. I would suggest people who like reading, get into that book. It's a very short book that talks about fear as a concept. And I think it's one of the most fantastic things I've ever read about fear. So feel the fear and do it anyway. Have a read about that. And then just understand that a lot of fear that we have is of evidence that appears real, but not necessarily actually real. I hope that makes sense. And the one message that I want you guys to understand, whether you've started, you're looking to start, wherever you are in your position in terms of your journey, please remember that you are not alone. I'm glad a lot of you guys have actually joined this. And now you know that I can see 22 here, and however many more are going to be watching this. There is many of us going through this journey. So there's no reason you should feel alone if you've got people that are feeling the same way or people that are doing the same thing. So reach out to us. Let's have a conversation. Let's help each other and look to get to where we all want to be. So that is actually my last slide, guys. And this is now the slide where I ask for questions. And I'm going to stop sharing, or I'm just going to allow you guys to just have a look at these handles. If anyone wants to contact me at any point, whether it's Instagram, Facebook, Twitter, LinkedIn, or in the community of Sim Property Investors, feel free just to look out for that and send me messages. Or if you want me to contact you, use the chat now to send me a direct message with your number, and I can have a chat with you and help with whatever I can. So I'm just going to allow you guys to actually start asking questions. Like I said at the start, please feel free to utilize this time that we have together, and hopefully it will be helpful to you.
Hi, Muzzie. Can I ask a question?
Yes, Silas. How you doing, bro?
I'm all right, thank you. Thank you very much for great content that you have shared. Much appreciated.
No problem.
I wanted to find out about your business model for SA, where you say you learn while you earn. Could you explain how that works?
Oh, okay. So the business model, this is actually following a conversation that you and me have had before. It wasn't actually on the presentation, but I'll just go through it. There's a lot of people that want to get started in property, but they don't actually have the time and they have the funds. So I went through this a little bit earlier on, where you can be time rich, but cash poor, or you can be cash rich, and time poor. So in terms of the earn and learn, there are some people that don't have the time to actually do the work, but they've got the cash and they want to learn about it at the same time. What we have offered is we find some properties for you. We then manage those properties for you. And whilst we're managing those properties for you, we bring you closer so you can see what we do, how we do what we do. And then as we're managing your property for you, you are actually learning from that experience. So that deal number one is your opportunity to learn, but deal number two becomes your own thing. You can then utilize the skills that we've shared that you can see to go and then do your own thing. That's the concept of earning and learning. So you are making money from the management that we're doing for you, but at the same time, you're learning how to run the concept. Does that make sense?
Yes, thank you. So a follow-on question. Do you need to be around where you live, or it can be done remotely?
So for the earn and learn, it doesn't have to be where you live. For the earn and learn, ideally, it needs to be where we manage properties. And then you can actually get to learn what we do from where we are. But for the deals or properties that you're looking to manage yourself, I'm always one of the people that says invest where you are, not necessarily because you're close enough to fix things yourself, no, but because one of the things you require to start investing in property is to know the area that you're investing in, understand the streets, understand the areas not to go in. And if you're going to start investing in an area that you don't know, you're going to need to spend a lot of time learning that area. So why don't you actually invest where you are already? Because you already know that area. Okay. So if you're actually getting a deal for yourself, I would recommend you actually invest either where you live because you know the area, or choose an area that you already know. Does that make sense?
All right. Thank you. Thank you very much.
Perfect. Perfect. Right. We've got a chat. It's been good, Muzzie. Thank you. Need to buzz off something else. Good luck, everyone. Thank you very much, Layman. Appreciate it. Right, I've got something else. Same was a great presentation. I'd love to chat some more, get some advice, build networking connection. That's the number. Fantastic. Thanks, Josh. I will definitely get in touch with you. I'll definitely get in touch with you. Right, I'm going to stop sharing, guys, and just ask for anyone who might have any questions. Feel free just to unmute and ask your questions. And let's utilize the next few minutes that we have together. Whether it's a question about the presentation itself or questions about whatever it is that you're doing where you are right now. Go for it.
Hi, Muzzie.
Hey, Shelly.
Hi. Yeah. Do you think when you get rent to rent a house, then they tell you to email, but you need to sell up yourself to write something that they can see you are going to take care of their house? Do you think if you don't write properly is the way they can say no?
Yes, yes. Okay, so just to make sure I understand the question, you're talking about if you go to speak to either agents or any landlords and they ask you to send email about what you're looking to do, is it possible that they could say no based on what you're actually saying on emails? And also, is it the best way to actually display what you can offer? Okay.
Yes, yes.
So one, yes, there's a very high chance that they'll say no. I'm an advocate of communication by face-to-face. And if you can't do face-to-face, the next best is verbal over the phone. Okay. So whenever you can, do communications via a face-to-face conversation. An email needs to come later on after you've already created the rapport. So when you do face-to-face conversations, you actually communicate in more ways than just the verbs, than just the words that you're using. You're connecting with another human being. So after you've done that bit and you've created rapport, you've created relationship, you can then add more information later. If the first time you're communicating about this is on email, you've got a very small chance that people will buy into it.
Okay.
Yeah. So try by all means to do a face-to-face conversation.
Oh, thank you.
No problem. Thanks for the question, Shelley.
Hi, Muzzie.
Hey, Daisy. How are you?
I'm really good. Sorry I couldn't come on late earlier. My session went on for longer than I thought.
No
But
worries.
my question is, what do you do if you found a property that's in a great location and it could be great, but then you go inside and it looks like hell? Do you just turn it down straight away? Do you take on the full repairs yourself? Like what? Do you just pass it on to the landlord and say, look, you know, you're going to have to fix, like, what's the best thing to do?
So it's in a great location and it would work, yeah?
Yes.
That is a great opportunity. So if there's something wrong with the property inside, it's a great opportunity to be able to do negotiations, i.e. what I mentioned in the presentation earlier on, I'm not sure if you were there, where I was talking about getting potentially rent-free periods. So a month free or 2 months free. So you can let them know that, okay, in the state that the property is in right now, it won't work for what we need. This is the standards that we need. So you can use pictures of other properties that you either have or that someone else you know has and say, this is the standard. Would it be okay for us to turn this property into this standard for the next 6 or 7 weeks? And then we can start the contract at the end of that. Yeah.
Right.
Now, if you estimate the 6 or 7 weeks, obviously you probably can do that work within 2 weeks. And if you manage to get that work done at that point, you still have another 4 weeks to generate cash flow before you have to pay rent. Does that make sense? So
Got
those
it.
are the really good
things
gems.
like, things like, you know, a bathroom really needing almost a whole refit. You would still take that on.
So if it's a rent to rent, it's worth assessing how much money you have to put into it. So we have the 6-month rule. If you do your due diligence in terms of the area, the type of property, the location, and the strategy you're looking to do, and assume that you're going to be making £500 a month, we have a 6-month rule. Now, this is a bit open. Sometimes it go up to 8 months. So if you have a 6-month rule, you will say, all the money that I'm investing into this property, I want it to come back within 6 months, i.e., if I've calculated 500 a month, it's going to be £3,000 that I need to put up front. So then you look at everything that needs doing, try to fit it into £3,000. And if it's going to be slightly out, increase it to 7-8 months. That's fine. But if the investment is going to require you to put money for like over a year, then I probably wouldn't suggest you take a deal like that. You would probably want to join venture or work with the landlord to see if they can invest some money into that deal, because they will get the benefit of the value of the property going up because of the work that you're doing inside their house.
Good, got that. Yeah.
Yeah.
Thank you. Yeah, that makes sense.
Great question. Thank you very much.
Hi, Muzzie.
Hello, Ike. How are you?
Hi, I'm fine. Thanks for this presentation. It's very helpful. I just wanted to add what this lady just finished saying. What, for example, I put all my money and renovate this property, will the landlord now come back and say he's not going to rent it to me? Is it possible?
Yes, it's very possible. That's a very good question. And it kind of goes back to one of the things that we said could go wrong, the landlord pulling out and you losing your money. So what I mentioned at that point was you need to actually, even if you ask for a rent-free period, sign the contract at that point. You sign the agreement at this point to say, right, we agree that the term of this rent will start on the 1st of January 2022. But in the meantime, from now on, I'm going to be doing this work. Our break clause is going to be in June 2022. And if any one of us pulls out at that point, they're liable to pay the other person. So if the landlord pulls out, they were liable to pay you for what you've already put into the deal, i.e. the material and the labor. So you have that in the contract itself to protect your finance.
Great, thank you so much.
No problem. Great question. Great question. Right. I've also got questions in the chat. Have you got any deals to sell for SAs where you manage properties? Yes, we do. Yes, we do. I'm gonna be in touch with you if you're interested in that. We've got some properties in the Coventry, Northampton, and Birmingham area. If you want us to share more information about that, I can be in touch with you. Thanks, Harold. So I've got questions from Josh. Josh, are you still here?
Hi, yep, still here.
Oh, there he is. There he is. There he is. I was just thinking, just to save me reading the whole question, are you okay to just talk to me?
Yeah, no problem. First question was, what's your marketing tips for keeping serviced accommodation occupied year round? Because obviously those periods of time where it's not being used,
Yeah.
you're losing money.
Great question. Great question. So I'll answer that one first before we talk about the next one. So I mentioned earlier on that before COVID, if you were to put the property on Airbnb, you'll probably be okay without having to do anything else. That's enough marketing. But now, not so much. Okay. So these are the things that you can do. One, understand who it is that you're actually looking for. So we're looking for contractors, and therefore we think a lot about what the contractors do, where they're going to be pretty much all day, what they do all day round, pretty much all year round. And we go out looking for them. We ring them at random. So you go, for example, going to McDonald's between 6 and 8 in the morning, because the contractor is going to be leaving the hotel where they can't cook and go buy food before they go to work. So you look at all those vans going through, take pictures of them or get information about those vans and the companies that they're advertising, and you ring those companies at random. You go to the sites that they're building. You go to the to where they have their breakfast, for example. If like around 10, they'll go to burger vans, go to where they are and speak to them, find out what they're doing, find out what their projects are, because you'll find that a lot of people actually have long-term projects. And then you actually have agreements with them to house them for that period of time, offer them something. Okay, now that will actually help you and close off as much as of the gaps as possible. It will leave up the holidays because obviously they have to go. Okay, now in those holidays, that's when you then work with Airbnb, reduce or drive the prices as much as you can to try to be as competitive as possible. And then the leisure guests will cover that period. Does that make sense?
Yeah. And it's one of those things, once the ratings start building up, it starts to kind of sell itself. But
absolutely,
those initial steps of getting yourself out there and securing people and that particular target audience, those contractors.
Yeah.
Is there a limit on how long you can have them housed with that particular mortgage arrangement?
Absolutely not. Absolutely not. So as I've mentioned that the only area that is regulated right now for service accommodation is London, and they have what's called the 90-day rule. So there's that element of you can't have them for another.
Yeah, I saw 3 months somewhere.
Yeah,
and I thought it must have been for that area.
But yeah, it's just London now.
Right. London and Edinburgh. Don't forget us, bro. Edinburgh is regulated.
Oh yeah. Edinburgh is not on the planet. We don't count.
Yeah, well, Josh is in Glasgow, so it's close.
Yeah, I'm in Glasgow too.
Oh, Glasgow is not counted actually. Glasgow is all right for the 90-day rule.
Cool, that's good to know.
Now it's at the moment, because it's not regulated yet. I have to say yet, which is why I think for anyone who's in the service accommodation sort of like industry, make the most of it before the government has a taste of this and wants to take money out of us. So
yeah,
whilst it's not regulated,
probably only a matter of time, isn't it?
Yeah, it's only a matter of time. They're coming.
Yeah.
Okay, so what was question 2?
Question 2 was, so if I was looking at probably like a buy-to-rent service accommodation, but it was a significant refurbishment job. How do I go about making sure that I get good return, well, maximize the return off of that? You know, how do I identify good building contractors, reliable companies, things like that?
Oh, this is such a Tabo question.
Yeah.
This is a perfect Tabo question. This is.
Go on, Tabo, sure.
It's got his name written all over it.
Josh, to be honest, I've spoken about this to Josh. Probably you wanted a different perspective or different views, you know. So, but like, yeah. I think it's like you've seen the standard which I go with my properties. It's like you just have to know your target market before you do any significant amount of work in there. Because I went above and beyond. Because I was trying to refinance these properties as well, like on the strategy of buy, refurb, and refinance, and we rent out a serviced accommodation. So I did a comparison to see in the market what's going on around the kind of market. Obviously, it's in G3 Finiston area. I saw what other 2-bed houses look like, you know, and how much their end value, how much they're fetching when they refinance these properties or when they sell them, you know. So I targeted my refurb based on that, and I did add a twist to say, wait, if I'm gonna rent this out as serviced accommodation, you know, I want it to look ABC, like nicer than this, you know. So that's why I went for the high end refurb cost, you know. Then in terms of finding trades has been my biggest nightmare in Glasgow. I haven't had a team. Like, I've changed so many trades, like just different people letting you down and all that kind of stuff.
You just cut the job short halfway and just say, look, this isn't working out.
Mate, I've had like a builder who's like who started doing works and they just left the job without even telling me, just disappeared. You know, so it's like, but all these people, I've been finding them through recommendations, through these kind of meetings, obviously Pin Glasgow, like all these things which are in your local area, just asking people, who are you using? You go see their projects, what they're doing. So like long back, I used to just take pictures at face value, but now I don't, because anyone can download pictures of something, of someone's bathroom, and say, oh yeah, I've done this. And you know,
go and
so
just go see
the projects themselves, and so but if you're still failing to find, I'll recommend like the other sites, like Check My Trade, mybuilder.com, you know, all these kind of building sites which you can see trades, you can see their reviews, and probably if you're thinking, or if your refurb is in a month or two's time, you can ask them where they're currently working, and you go see that place there, you know. So it's like it's more like an interview process, you know, because you interview someone who you're gonna give your money to, you know. So, but at the minute as well, like because of supply and demand, like trades are busy, so they're charging higher prices, so you won't get a cheap trade anyway.
No, but you're planning to recoup that investment and more, presumably, in every one that you're selecting.
Yeah,
you should come out better off as a result of what you're doing.
Yeah. But like another thing as well, like don't be scared to leave money in the deal. So I don't know if you joined the call when Muzzie did a case study of his deal. Like he left some money in the deal there, because obviously this house is now yours. If this is owned, it's now yours for a long time. So don't be scared to leave some money in the deal. But obviously, if it's rent to rent, I wouldn't recommend like big refurbs like this, you know, like painting job. Like if it's a rent to rent, I think for me, painting is the most I'll do for the landlord. But if you're gonna be, I think there's a lady who asked about changing bathrooms and that. Nah, if you see like you're now changing bathrooms, that's too much. Like personally, this is me. I wouldn't do it. I'll just paint the stuff, make the property nice with a lick of paint, and just rent it out on serviced accommodation. And you asked about contractors, mate. You actually work with a lot of contractors, so you should be giving us contractors. So
I hadn't thought of that.
So we're gonna need to have a word.
Who are coming from different areas to build the ship, like at the shipbuilding or in, like whatever, like Glasgow industry is, like they're just coming for work.
Because I thought there was that limit.
Sorry?
I hadn't considered contractors as much because I thought there was that limit on months, whatever. I know I'm letting myself down here. It's terrible.
So like, you know, your car park, you've seen your car park, how many vans are filled up with, you know, so
working
you take
from over
those
2
numbers,
years, man. Give me a break.
Nah, fair. I think that's a brilliant question, to be fair, Josh. Thank you for pointing that out.
Thanks for the time.
No problem.
Okay, cool, mate. Speak later.
Awesome. Thanks for the response as well, Tabo. Much appreciated. Right. I was looking for this to actually run up until 7:30, just so I don't take too much of people's time. But I'm happy to take any more questions if anyone has got any questions, guys. Anyone got any questions?
Me,
Hi, Shelley.
yeah, I just want to give Tabo a question. Can you do my sauce, Tabo? Don't laugh, Muzzie.
Tabo has left.
Tabo's left the room. Tabo's gone.
Now, Shirley, I will help you, but you know, like I'm concentrating. Property is like 10% of my time, you know, so it's like time is a bit hard at the minute, but we can have a chat offline.
Okay, thank you.
Okay, no problem.
Awesome. Silas, you had something to say?
Mine is just a quick one. I'm looking at a deal. It's a 3-bed mini HMO. It's already tenanted. It's got potential for capital appreciation, and the location itself is very good. So what I wanted to find out is the tenants are already there. Some of them have been there for some time. What evidence would I need to find out about their payment history?
Okay, so firstly, it depends on who's actually running the deal. Who's actually running the property. They will have the evidence of them. So it's not a difficult thing to actually download all of their payments. Some people actually use systems that can do that information for you. But worst case scenario, they can produce bank statements. Simple. They can give that information of this person pays on the 20th of every month and they missed this one, but they paid on the 22nd. All that information can be shown there easily enough. Now, what I'm slightly concerned about is the fact that it's actually a 3-bed. So it's a 3-bed HMO. You're calling it a mini HMO. Has it got 3 tenants? Or is it a 3-bed with a reception room?
It's got 3 tenants that are renting per room, different rooms. It's got a sort of common area.
Okay, brilliant. So 3 beds are slightly riskier, and I'll explain why. So a 3-bed itself, if you have a look at what the numbers actually offer, do you know what the numbers are, as in what the rent is and what the room rate actually is?
I think they're coming out with 1.140 between the 3 of them.
So 1.140. That's how much. That's how much they all pay in total.
Yes.
And what's the rent to the landlord?
Because I'm not entirely sure.
Okay, so if we just assume that they all have the same size room and they're paying equally, 1.140 is £380 each. Okay, so I would say your rent probably might be somewhere around the £700-800, dependent on the area, if your room rate is about £380 for that type of property. Now, the reason I'm not a big fan of 3-bed HMOs is because once in a while for HMOs, you will lose 1 or 2 tenants. Okay. And my concern with the 3-bed is as soon as you lose 1 tenant, that's a big problem. Okay. Because if you lose one of those tenants that are paying £380, you are just getting £760. Now, in that £760 coming from the 2 tenants, you have to pay around, let's say, £650 rent, but you still have to pay the bills as well. So straight away, you have to pay into that deal. As soon as you lose 1 tenant, you have to pay into that deal. Okay. So that's where my risk is. So which is why I'm a big fan of, if you're going to do an HMO, try to make it a minimum of 4 bedrooms. Because if you have that same scenario for a 4-bed, or if you get a 3-bedroom house with 2 reception rooms, turn one of those receptions into a bedroom, now you've got 4 tenants. And with the 4 tenants, if you calculated that you lose 1 tenant, you should at least break even. At worst case scenario, just break even. so you don't pay anything into the deal when you lose one tenant. Does that make sense?
Yes.
Okay, but in terms of proof of payments, the simplest way is to just go through bank statements of whoever they've been paying into. So if you were to take on my HMOs, if it's one that you're looking for, I can print off a bank statement that shows for that property because it's got a reference of each of the tenants.
Yeah.
Or a letting agent can offer that information because they've got all that detail. They don't have to show exactly all the details before you sign the contracts or anything like that, but they can show you information that is enough as proof that these people have been paying.
Okay. So, I mean, the letting agent is saying due to data protection, they can't.
Yeah. They can't,
Is that true?
they can't give you the names.
But the figures, they can.
Yeah, they can show you the figures.
Right, okay.
Yeah, they can show you the figures. There's nothing wrong with actually showing you the figures. Data protection refers to the names of people.
Right, okay. Yeah, I'll take it up with them, thanks.
Okay.
Yeah, thanks very much.
No problem. No problem, no problem. Okay. Does anyone else have any questions? Okay. Okay, I'm not seeing any questions in the chat. I'm not hearing any questions now. Just want to take this opportunity to thank all of you guys who are part of this from the start and the people that have joined midway and the contribution you've had in asking questions, some brilliant questions that you guys have shared. And thank you to the guys that are actually watching this as well. So for anyone who may want to contact me, I showed the contact details on the last slide. Feel free to reach out. And thank you so much, guys. If I could just ask you all to unmute and say bye to each other as we close, that would be great.
Thank you, Muzzie.